Hey everyone, Colin here from One Bank Financial Planning. Today I want to go over a case study that I recently went through with a client, and I want to go over it so you guys don't end up in the same tax situation that these two individuals were in. So let's start. We have an uncle and a nephew who own a farm corporation. Uncle owns 1/3 and the nephew owns 2/3. The farm corporation has $600,000 of cash, $1 million of farmland. Apparently I can't spell farmland. 1 million. And they have about $60,000 in inventory. Okay, so in this situation here, the uncle wants to sell his shares to the nephew, and he's also in a position where his health is not doing very well, so he wants to make sure that his farm corporate shares can qualify for the lifetime capital gains exemption. So based on owning 1/3, the uncle's fair market value, the value of his shares, is worth approximately $550,000. Okay, so 550 is about 1/3 of this company's value. Now, when they originally set up this corporation, uncle's shares were worth $100, so he has a very low ACB. So he's looking at a capital gain of $550,000. But uncle is a farmer, so he can access the lifetime capital gains exemption. This is a farming corporation, so this tax here can basically be eliminated by the lifetime capital gains exemption. He has plenty of room left, so he's fine. He won't have to pay any taxes when he sells his corporate shares. However, that's not the case because this farm corporation does not qualify for the capital gains exemption. And here's why. When you look at the amount of farm assets that this farm corporation owns, it only makes up about 65% of the corporation, while his cash is making up the other 35%. For a farm corporation to qualify, it has to have at least 90% of its assets in farm assets. So you can't have more than 10% of your farm assets in cash, or in some cases, people buy life insurance policies. So if the cash surrender value is high, that also affects your ratio here. So in this scenario, if uncle were to pass away tomorrow, this farm corporation is offside. And by the way, I should mention, all of uncle's shares are going to the nephew. So the plan was for the estate to obviously sell these shares, not have to pay any taxes, and then have those shares simply move over to the nephew. However, the estate is going to have to pay some taxes if uncle were to pass away, because this isn't a qualified farm property. Again, because it has way too much cash sitting inside of here. So what would happen if uncle were to pass away? This 550 here would be taxable just like any other capital gain. So he'd be looking at a taxable income of $274,000. Because when you have a capital gain, 50% of it's taxable. So uncle would add $274,000 to his tax return, and on $274,000, you're paying close to approximately. I mean, obviously there's credits and other things, but you're looking at about $110,000 of taxes. So that's the difference between having an offside farm corporation, you have to pay $110,000, and having an onside one, which would be basically zero. Okay, so what could these guys do? They could use some of this cash to buy more farmland, bring in the corporation onside, or they should start withdrawing some cash here, which in and itself will create a tax liability. However, it's better than having to pay $110,000 and not having any choice. So they could start withdrawing cash as well. So it's funny how this is a successful farm corporation, farm business, yet because they've built up so much cash inside of here, there could be a huge tax liability at death. And if we were to take this a step further, if uncle doesn't have any money to pay this $110,000, then the nephew's going to have to take some money out of here to pay that tax bill. I mean, it's going to be just a chaotic situation. So make sure your foreign corporations are staying on side. I've just touched on one simple rule today. There are other rules, so make sure that you're discussing with your foreign advisors to make sure that you're able to qualify for the lifetime capital gains exemption if you ever end up selling or trying to transition those shares when you pass away. Have a great day.